ABC's another word for it. A lot of companies, the companies that use it, I believe Toyota uses it, benefit, but it is a costly system to use because you have to use this usually in adjacent to using another costing. ABC is a costing method that's designed to provide managers with cost information for decision making. And usually it affects capacity. It's ordinarily used as a supplement rather than a replacement for the company's usual costing system. As a result of them adding another costing system, it's involved, it's costly, they're running two systems at the same time. So how this differs from one of the traditional systems that we've been using, with ABC in either manufacturing or non-manufacturing, are assigned to products only on what we call a cause and effect basis. So ABC systems assign sales commissions, shipping costs, warranty repair costs to specific products. So some manufacturing costs are going to be excluded from the product costs. With activity-based costing, it generally excludes the organization sustaining costs and idle capacity costs. So usually in this case, they're going to assign costs, but usually not all of the manufacturing costs. ABC differs from for traditional cost accounting because numerous overhead cost pools get used. So as you see here, it's more complicated. You may have various cost pools. Each ABC cost pool has its own unique measure of activity. Traditional cost systems usually rely on direct labor hours or machine hours to allocate overhead costs. Now, they can work directly, the labor and machine hours can work right when changes in the quantity of the base are correlated with changes in the overhead costs being assigned using that base. But with ABC just relying totally on hours like that to assign overhead costs has really not been as effective. Direct labor and overhead costs have been moving in opposite directions, and the variety of products produced by companies has increased. So ABC tries to find other manners in which to allocate costs. So in this case, there's an activity, which is an event that causes the consumption of resources. And we have activity cost pools, which is like a bucket in which costs related to a single activity measure get accumulated together. So an activity measure we're going to use as an allocation base in the ABC system. And the term cost driver is going to be used to refer to this activity measure. Two types of activity measures. There's going to be two drivers, a transaction driver and a duration driver. So the transaction driver is just the number of times a certain activity occurs, such as the number of openings of new accounts or the number of deposits. A duration driver is the measure of the amount of time needed for a specific activity. Now, when we use traditional systems, they rely on allocation bases that are always driven by volume of production. With activity-based costing, we're going to look at 5 levels of activity that largely do not relate to the volume of units produced. So here with ABC, we're going to look at unit level activities, batch level activities, product level activities, customer level activities, and then organization sustaining activities. For ABC to be successful, there's got to be management support at the top, because to embrace this system and to have everyone on board, it's going to acquire a lot of changes. If employees are not rewarded according to what they truly can be influenced or affected by, that's tough too. If employees continue to be evaluated using traditional systems, they're going to get the message ABC isn't important. So for people to really implement this and be successful, they're going to need to use this ABC to be rewarded based on this method. And cross-functional employees possess intimate knowledge of operations that are necessary for developing a great ABC system. So, company in this scenario with Baxter makes two types of automobile batteries. Sure Start is a standard battery and Long Life is a deluxe battery. Baxter has reported a loss on this balance sheet. So you see the sales of $50 million, the cost of goods of $41, the gross margin of $9, various expenses with a $2 million loss. So at Baxter, this new team that's been implemented to create ABC selected the following activity pools and activity measures. So you see, one activity pool is customer orders, and they list it as how many customer orders happened during the month. Design changes, that's a pool, and the measure is how many design changes happened during the period. Order size would be under machine hours. Customer relations is the number of active customers, and then another other category. So customer orders are assigned all cost of resources that are consumed by taking and processing the customer's orders. Design changes involve costs of resources consumed by customer requesting design changes. Then there's the order size. We would assign cost of resources consumed as the number of units are being produced. Then we have customer relations, assigned all costs associated with maintaining customer relationships with customers. Then we have, lastly, other, assigned all organizational sustaining cost and unused capacity cost. So here we go. Here we look at various activities of a company, Greenwich Corporation. It manufactures a variety of products. Classify each of the activities above as either a unit level, batch level, product level, or organization sustaining activity. So in this case, when we receive raw materials from suppliers, that is what we're going to call a batch level activity. Managing parts inventory is going to be at a product level. Doing milling work on products, we're going to show that at a unit level. Interview and process new employees, that's going to be an organization sustaining. Designing new products, of course, is at the product level. Perform periodic preventative maintenance on general use equipment, organizational sustaining. Use of the general factory building is organizational sustaining, and issue purchase orders for a job is going to be at the batch level. So this is just trying to help you understand all the various activities and how we would define them on different issues of levels. Various activities at Ming, a manufacturing company, are listed below. Each activity has been classified as a unit level, batch level, product level, or customer level activity. What types of activities, examples of an activity measure for each of these activities? So here we've got direct labor workers assemble a product. Well, we see the level of activities per unit, and how would we measure this activity? We would measure it based on direct labor hours. Products are designed by engineers. This is at a product level, and we could either have based on just number of new products designed, including hours of design time. Okay, so what we're trying to do is understand the level and then understand how it would get measured. Machines are used equipment is set up, number of setups, and setup hours. Machines are used to shape and cut materials, number of units processed along with machine hours. Monthly bills are sent out to regular customers, number of bills sent and time spent processing. It's kind of logical, right? Then materials are moved from the receiving dock to the production line, how many loads were transferred, and the time spent moving it. All completed units are inspected for defects. How many units are inspected? And again, the number of hours, okay? This shed, in all cases except for direct labor, 2 activity measures get listed. The first was that transaction driver we're talking about, and the other one was the duration driver. Like, what are we measuring, and the time spent. Now we're going to take cost and assign them to cost pools. So here we've got the production department, we've got the general admin department, and the marketing department. So we've got a couple different departments here we're looking at, and we're going to see how we're going to assign them. Direct materials, direct labor, and shipping are excluded because Baxter's Batteries' existing cost system can directly trace these costs to products or customer orders. So we're not going to worry about those at that aspect there. The following distribution of resource consumption is determined across these different pools. So for the production department, we're looking at customer orders. We're looking at design changes, order size, customer relations, the other category. And people have to be able to figure out, for example, in indirect factory wages, what percent of those hours are spent with customer orders versus design changes versus order size, blah, blah, blah. The same when we look at depreciation. The same when we look at general and administrative. We're going to look at administrative wages and salaries, and someone has to know what percent of time is spent on these different activity levels. And then the same with marketing, okay? So we basically then have to go and assign these costs to the various activity pools. So when we look at indirect factory wages and we saw a certain percent was assigned to customer orders, We then have to take that full 6 million, take that percent that were assigned just to customer orders, and earmark the customer orders at 1.8 million. We're going to do this across the board at each of these activities. For factory equipment depreciation regarding customer orders, we have to assign 20% because that's what was given to us. So you see, all of those costs get assigned to each of these cost pools. Okay, so the expenses related to customer orders is $4,520,000. Related to design changes, $3,040,000. Order size, $5,200,000, and on and on. The operations vice president of Security Home Bank's been interested in investigating how efficient the bank is. She's concerned about the cost of handling routine transactions and wants to look at various branches to see how they're doing. If the branches with the most efficient operations can be identified, their methods can be studied and replicated. While the bank maintains meticulous records of wages and other costs, there's not really been an attempt to show how those costs are related to various services provided. So basically what's happening is she wants to take some activities and see where the time's being spent. So she is looking at opening accounts, the cost of processing deposits and withdrawals, and the cost of processing other transactions. So this particular branch has teller wages of $160,000. The assistant branch managers at $75,000, the branch managers at $80,000. So costs such as rent, depreciation, are organization sustaining costs, so we're not worrying about assigning those. The employees of the Westfield branch have been interviewed concerning how their time was distributed last year across the activities. The results of those show that the teller wages, 5% of teller wages were spent opening accounts, and 15% of the assistant branch manager's salary was spent opening accounts, and the branch manager was at 5%. So you can see across the line here where they're spending their time, which attributes to the money involved with each. So what we have to do is take these various costs, and based on these percentages, we then take, for example, the teller's wages of $160,000. If processing deposits and withdrawals is 65% of their time, we take the 160 times the 65% and show those teller wages of $104,000 allocated for just processing deposits and withdrawals. Do you see what we're doing here? So we're basically doing all of this. If the teller wages, 20% of their time is processing other customer transactions, we're going to take this $160,000 times 20%, and we put our $32,000 in here. Does that make sense? So here we show the various allocations for costs. Now, once we've done that, we're going to compute rates for these cost pools. If the ABC team decides that Baxter Battery will have these total activities for each of the pools, so 10,000 customer orders, 4,000 design changes, 800,000 machine hours, and 2,000 customers served. Now what we can do is look at these activities and look at the total cost and come up with kind of what each activity is going to cost based on historical information. So if customer orders were 4,520,000 and we're anticipating 10,000 orders, do you see our cost per order is about $452 of our cost? Design changes. If we've got $3,040 worth of design changes and we anticipate 4,000 changes, do you see each one of those changes is costing about $760? Then machine hours, we've got cost related to the order size. Customer relations, each customer contact is averaging $1,540 per customer. Okay, so what we'll do is trace as much as we're able to the direct materials, the direct labor, and the shipping costs to the various cost objects. Now, the overhead costs are going to the orders, the design changes, the order size, customer relations, and other. So you see the second stage allocation. The first stage basically, the first stage allocation channels costs to the activities. The second stage allocation then brings it at a per level cost, or how much is it costing per order? How much is it costing for each change? How much is it costing for each machine hour? How much is the customer relations costing? So we're bringing it down to a closer level per order, per job, per machine hour. So again, our Westfield branch, we have the total activities. At Westfield, we opened 500 new accounts, and processing deposits and withdrawals, we processed 100,000 deposits and withdrawals. And then other customer transactions, there were 5,000 other miscellaneous transactions. So the lowest cost among all Security Home Bank branches shows that the lowest cost to open an account was $26.75. The lowest cost in processing deposits and withdrawals is $1.24. And then other transactions, $11.86. So we'll use that first stage allocation to assign the lump costs to the various pools. And then from there, what's it going to tell us? So the first stage allocation is taking that $160,000. Remember how we did that? And we assigned the costs. So here we see opening accounts. We had $23,250 in costs assigned to opening accounts. Processing deposits and withdrawals, we had $107,000 assigned for that. Processing other transactions, $62,000. So if we look at this and then figure out, okay, we had 500 new accounts that were being opened, that would be $23,250 for opening accounts. Okay, that's what we have here. As far as 100,000 deposits and withdrawals at $1.08, we've got 107,750 showing processing the withdrawals, and then the other processes of 62.5. The cost of opening an account at the Westfield branch is much higher than at the lowest branch. At the lowest branch, it's at $26.75, but at the Westfield branch, Probably because the assistant branch manager's doing a lot of it. It's costing more, $46.50 for each opening of an account. Now, the cost of processing deposits is really cheap at this branch. It's only $1.08 versus the other lowest one is $1.24, but there's a lot of volume there. The cost of other transactions is a little higher. So, what is it they're looking at? Westfield may benefit from learning about how some of the other branches open accounts and process other transactions. Is the cost of opening accounts at Westfield high because of the involvement of the assistant branch manager in this activity? Maybe tellers could be opening accounts at other branches. But then you also have to look and say, but is it bad? Is it bad that they're spending more money, that the assistant branch managers are opening the accounts? Maybe there aren't mistakes being made. Maybe they're developing a good rapport. That's going to play out in the long run. The differences in the cost of the activities at the various branches could be due to inaccuracies in employee reports of the amount of time they devote to activities, or it could also be just different strategies, how they're choosing to spend their efforts. The Westfield branch may purposely spend more time with new customers in order to gain their loyalty. If that's their purpose and they know those costs are going to be higher, it might not be a bad thing. It'd be interesting to see what their loyalty is at this branch versus at other branches. Okay? Now, assigning cost to cost objects using that second stage allocation. We've got to come up with the total cost and then the amount of numbers of activities in order to come up with a cost. Sure Start with batteries requires no new design resources. But with Long Life, we require design resources. With Sure Start, we had 800,000 batteries ordered with 4,000 separate orders. With Long Life, we had 400,000 batteries ordered with 6,000 separate orders. Okay, more orders, a lot more orders. Each Sure Start requires 36 minutes of machine time for a total of 480,000 machine hours. With Long Life, not only did we have 4,000 custom designs, each Long Life requires 48 minutes of machine time, totaling 320,000 machine hours. Okay, so if we take the customer orders by the activity rate and multiply them by the activity, you see the overhead cost for Sure Start is $4,928,000. But look at the Long Life, guys. Long Life, a lot more resources are getting put in to Long Life, and a lot of it is the design changes. Okay? So, we've got the numbers here, the ones we can assign to Sure Start, the ones we can assign to Long Life. But boy, those design changes are really eating up a lot of costs for the more expensive battery. Let's take a look at how Baxter's system works for just one of the 2,000 customers. Acme Auto Parts placed a total of 12 orders last year, and 4 orders for Long Life that Acme ordered required design changes. So they had 8 orders for Sure Starts, 4 orders for Long Life. So you see the 480 Sure Starts required 288 machine hours, and the 200 Long Lives had 160 machine hours. So now we can look at one specific customer, specifically what they ordered and what the costs were for this one customer. If you see The customer orders had 12 orders, 4 design changes, the order size, and the customer relations. The cost assigned just to Acme is $12,916. Okay? For just Acme Auto Parts. That's what was assigned specifically for Acme. If we look here at Durbin Metal, it makes specialty metal parts used in cutting metal from bulldozer blades to replacement parts of Land Rovers. They use an ABC system, and we see the activity pools, order size, customer order, product testing and selling, and how we measure it, and the rate. The managing director of the company would like information concerning the cost of a recently completed order for heavy-duty trailer axles. The order required 200 direct labor hours, 4 hours of product testing, and 2 sales calls. What is the total overhead cost assigned to the order for heavy-duty trailer axles? So guys, I just want you to kind of take like 5 minutes and see if you can do the second stage allocation. Okay? And then we'll go over it together. Yes. Yeah?
What exactly is the
Yeah.
adding something else to it, not assigned?
Okay, which one was it?
Slide 76.
Okay. So down here, you see here the 9,240,000 weren't assigned. So we only assigned 9,240,000. Excuse me. The 4,928,000 plus the 7,832,000. These two amounts, these were organizational sustaining. that couldn't get linked to a specific activity. So they let you know, let me just see, over here somewhere. Well, with Baxter Battery, somewhere in one of the previous slides, the total costs were $22 million, but some of those costs weren't going to be assigned specifically because they might have had other means in which they were calculated those costs. I think that initially it said the other costing system that they use assign those costs specifically, so they're just using it for these specific ones. Does that help you?
Yeah. Back in like page 50
Yeah. Yeah. Okay, guys, so let's look at this one. Heavy duty trailer axles. We know the order required 200 direct labor hours, 4 hours of product testing, and 2 sales calls. So 200 direct labor hours at $16.85 per direct labor hour gives us $3,370. The customer orders $320 per customer order. This is one order. Product testing, we had 4 product testing. And then selling, $1,090 per sales call at 2 sales calls, $2,180. Okay? Okay, does that make sense? So if we total those up, we've got overhead costs for this order was $6,226. Now, we can use this method to compute product margins and customer margins. The way we do this, we've got our sure starts and our long lives. We've got the direct costs for the sure starts and the long lives. Now we can assign expenses to the specific 2 types of batteries pertaining to each product. So if we know, instead of lumping them as a whole, if we take it as a whole, you see here that with customer orders, for sure starts, it's at $1,808,000, with long lives $2,712,000. For design changes, sure starts don't have any design changes, so that all goes for long lives. And then for the order size, so if you see it this way, you see that with our sure starts, we've got about $5 million worth of costs assigned to sure starts, and we've got about $8 million worth of costs assigned to long lives. Okay, do you see that? And look at the profits, or look at the sales, and look at the cost assigned to each. So it's like we're losing money on long lives, guys. See that? So as you see here, by taking them by product, sure starts have a product margin of $8,372,000, but long lives, we're in the hole. We've got a minus $1,132,000 in relation to long lives. So even though, we can't assign all the costs, our net operating loss here, we've got costs that aren't assigned to products, but you see right away our long lives, we're not even making money when we look at the costs. So from that, they're going to either have to figure, can they increase the cost or the sales, or do they do away with this? What is the answer? It's costing them more than what they're bringing in. The first step in computing Acme Auto Parts customer margin gathers its sales and its direct cost data. Because remember, we went back and looked at Acme and saw the cost we were spending for Acme was about $12,000. Here we see the sales that Acme paid was at $29,200. We've got the direct cost for Acme at 13, 14, about 16,000. But look at the costs here. All these other costs that we assign specifically to Acme, Acme's not worth it. Okay? So when we do the second step and we look at Acme Auto Parts costs, we are making $384, guys, on the customer, Acme. So it's really helping them see where their resources are going. Remember, the first step in computing product margins is to gather the sales and cost data for each product. So that's in here. Then the second step is computing product margins by coming up with an overhead rate. So the plant-wide manufacturing overhead rate, if we did it the traditional method, it would show with Baxter Battery 14 million total overhead. And if we do that by machine hour of 800,000 machine hours, we're at $17.50 per machine hour. Okay? And then if we go and allocate by the traditional method, it's taking our sure starts and overhead, allocating 8,400,000 to our sure starts, allocating 5,600,000 to our long lives. But do you see how technically that's not accurate? Long lives are taking a lot more money. By using the activity-based system, we are really seeing what kind of money the long lives cost. But if you use a whole list, plant-wide rate, and allocate the same cost to the sure starts versus the long lives, you're going to come up with different numbers. The 4 steps, computing the product margins, as we're showing here. So doing the traditional system, do you see how it looks like long lives are making money? But when we went through the activity-based costing system and we really took it apart for what, based on the various pools, what it's really costing us, we're getting 2 different sets of information. What's the difference here with ABC versus costing? When we look at the traditional costing system, over cost the sure starts, they're charging more money to the sure starts, and they report a lower product margin for sure starts. And the same's true with the long lives. It undercosts the long lives and makes it look like they're making more money when in fact they're not. There are 3 reasons why the reported product margins for the 2 costing systems differ. Traditional costing allocates all manufacturing overhead just to products, but ABC only assigns manufacturing overhead costs consumed by products to those products. Traditional costing allocates all manufacturing overhead costs using a volume-related allocation base. ABC costing also uses non-volume related allocation bases. And lastly, traditional costing doesn't take into account selling and admin expenses since they're period expenses. So they don't even take them into account on their product costs. ABC, though, traces the shipping costs and includes non-manufacturing overhead costs caused by products in the activity cost pools that are assigned to products. So activity-based management gets used in conjunction with activity-based costing to look at areas that would benefit from process improvements by putting energy on activities that eliminate waste to decrease processing time and reduce defects. ABC activity rates can provide information concerning where there's waste and how they could possibly improve. Okay? Most companies do not use ABC for external reporting because external reports are less detailed than internal reports. It's difficult to make changes. ABC is not GAAP conformity, doesn't conform to GAAP, and auditors don't like it. So companies mainly use this ABC for internal purposes. There are problems with it, though. It costs money. It costs money, 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 money. It's a negative. Desire to fully allocate all costs to products does not conform to GAAP, so you need two systems. There's going to be unfamiliarity with a new method. And unless you're really familiar and have utilized it, you could misinterpret the results. Okay? Let's just see. I think what I'd like to do is go through a problem in the homework if you guys are game for that. Can we do that? Okay, so let's start with we'll start with one of the first problems here. No, wrong one. Wrong class. What? Okay, what am I doing wrong? Okay. So here we've got Smoky Mountain makes 2 types of hiking boots, Extreme and Pathfinder. Data concerning these 2 product lines appear below. So we've got the selling price per unit per boot. Extreme is $140, Pathfinder's $99. Our direct materials, Extreme is $72, Pathfinder's $53. Direct labor, $24 and $12. Direct labor hours per unit, our Extreme takes 2 hours, the Pathfinder's only 1 hour, and we estimate the sales for Extreme to be 20,000 units, Pathfinder 80,000 units. The company has a traditional costing system that applies manufacturing overhead to units based on direct labor hours. Data concerning manufacturing overhead and direct labor hours shows 1,980,000 of manufacturing overhead at 120,000 direct labor hours. It tells us to compute the product margins for Extreme and Pathfinder under the company's traditional system. And the company is considering replacing its traditional costing system with an activity-based system that could assign its manufacturing overhead to the following 4 activity cost pools. And we see there that we're looking at the estimated overhead costs, batch setups, product sustaining, and other. Other cost pool includes organization sustaining costs and capacity costs. So compute the product margins, and then we would compute the product margins for under each system. So the first thing we're going to do is compute the product margins for Extreme and Pathfinder under the system here. So you see, they told us the sales for Extreme, 20,000 units at $140, right? So let me get out a let me just I didn't want that. Okay, so let's just kind of look at if we've got 20,000 units, let me find it, at $140 for the Extreme, how much would that be, guys? So we've got 20,000 units at 140 apiece. At 140 apiece would be 280,000, 2,800,000. And we would also show here the Pathfinder, $99 times 80,000 units. $99 times 80,000 units is 792, right? can I put in county? Okay. 2,800,000, Pathfinder 792, right? Okay. Then our direct materials, we showed direct materials of direct materials 72 times 20,000 units, direct labor 24, so 72, 24, okay? So these are sales. Direct materials is 72,000 or 72 bucks times 20,000 units. Right? And the direct labor was what, guys? Let me find it again. 24 bucks times 20,000 units. $24 times 20,000, 480,000, right? And then the direct overhead applied, manufacturing overhead, 1,980,000 divided by 120,000 units is what? 1,980,000 divided by 120,000 units. Is that $1,650 a unit? So we'll have here our manufacturing overhead, and we've got here 2 hours times 20,000 units. That would be 40,000 hours. 40,000 times 1,650. Do you guys agree with that? See what we're doing? We come up with our total costs here. And we've got then our product margin. Okay? Let's look at the Pathfinder.
I think you did the first one wrong.
Okay, what did I do wrong
I
here?
think you're supposed to multiply it by 8,000 units. Or did you? No, for Pathfinder.
Pathfinder. So Pathfinder, I've got the direct materials,
Or did you do it right? I don't know.
99 times 80,000 units, okay? Then I've got $53 of materials times 80,000 units, right? No, 53, shoot, equal 53 times 80,000 units. Okay, and then direct labor was direct labor per unit. Um, 12 times 80,000, right? And the manufacturing overhead was the $16.50 times 80, excuse me, or we've got 80,000 units at 1 direct labor hour, so 80,000 times 1650. 1650. Okay, so this particular product margin here, product margin for extreme, shouldn't this be at 220,000? And product margin for Pathfinder should be at 1,400,000. Do you guys see what I'm doing? Yes? No? Okay. Next, compute the product margins for Extreme and Pathfinder under the activity-based system. So what we'll have to do there is figure out the total costs. So where does it show me the total cost, estimated total cost for supporting 783,600, and we've got it broken up. 120,000 total hours means that supporting director, 783 times 120, let me just do this. So 783 divided by 120,000 hours means our activity pool supporting direct labor is going to be 653 per direct labor hour. And this is per direct labor hour. Then the other one was our batch setups. Our batch setups, 495 divided by 300, right? 495 divided by 300 setups is going to be $1,650 per setup. And then our product sustaining, 6024 divided by 2. So our 6024 divided by 2 is 301,200 per product. Okay, so if we go back to our initial, this was using traditional, but let's go over here and use activity-based. Copy, paste. Okay, so we know our sales is right. And then if we do our direct materials, we've got our direct labor, our manufacturing overhead, we're not going to have that one. Okay, we're going to delete that one. But instead, we're going to have our supporting direct labor, that is 653, and how many supporting direct labor? 40,000. So 40,000 times 653 is 261,200. Then we've got batch setups. Batch setup is 1650 per setup, and we've got 200 setups, right? 250 setups times 1650 should give us the 412. I think I'm doing something wrong here. Batch setups. 200 setups, right? Batch setups, 200 setups times, I had 250. 200 times 1650 should be our 330. Then our product sustaining is 301,200. Here, let me move these. Cut. Then our product sustaining was the 301,200. So that should be Does that make sense? 2,812,400. So our product margin here would be a loss of 12,400. See what I'm doing here? Let's do the same with the Pathfinder. The supporting direct labor is how much, guys? Supporting direct labor, 53 times 80,000. Right? 4,240,000. The direct labor hours is 12 times 80,000. And the product sustaining should be the same, 3,012. I feel like I'm doing something wrong here. 4,240,000, 960. This is wrong. Supporting direct labor hours is 12 times 80,000. Times 80,000. Direct labor hours, let's see here. This was supporting direct labor hours. That was 80,000 times the 1650. That's where I screwed up. Or excuse, direct labor hours, $6.53. Okay? And batch setups were 1650, and how many batch setups did we have? One batch setup, so that's going to be 100. So batch setups 100 times 1650, 165,000. Okay, so do you see what it shows us here? The margin here is minus 12,400. This would be minus 12,400. And yet the Pathfinder was 1,731,400. Does that make sense? Moving on. If you went the traditional, I'm just going to exit this so I can show you exactly because I'm running out of time. If I show you when we compare them here by taking the traditional system, and then you take, basically I put all this information in to the activity-based costing. This would show you your comparison between the two methods. Okay? Make sense? Moving on, I'm going to give you some of these answers because there's a lot to do here. This particular one, you're doing the first and second stage processes, but the first stage allocation, based on the percentage of time the various wages and disposal fees are pertaining to the various activities. Here's what you'll come up with. Then for activity rates, here's per activity rates. And then when we're dealing with routine 1,000 square foot job, routine 2,000 square foot job, and a non-routine 2,000 square foot job. Okay? Make sense? And then again, on this one, cost of serving the local commercial market. We're giving various films. So I'll give you this cost of serving the local commercial market. And then part 2, the margin earned.